Right, this is Zach here with a weekend edition of the Bulletin Board Heroes. It is Sunday, the 3rd of September. Starting with the FTSE 100, where we're in a neat little bull flag either side of the 50-day moving average. It's sort of classic pattern. Suppose we had one of those last month. There was a bit of follow through on the upside there, but ideally above 74.30. We are heading back towards the top of that falling trend channel from February at 76.70 by the end of this month. If you're cautious, you wait for a break of recent resistance around 75.20, but with the RSI bounce off neutral 50 over the end of the week, one would be looking for the market to head higher directly from current levels. Moving along to the DAX, and here we've had an analogous setup to what we had at the FTSE, in the sense that we're looking for this market to break the 50-day moving average at 15,900. Obviously, on Friday, we fell back, and so it's a bull trap through the 50-day line. Want to see an end-of-day close back above 15,900 to prevent either a test of the floor of that rising December channel at 15,600, or even worse, down to the 200-day line at 15,400. But that would suggest, if we headed down, that there's a divergence between the FTSE and the DAX in the FTSE's favour. RSI bull trap for the RSI through the neutral 50 level, then coming back below that 50 level, but not quite definitive failure just yet, despite that 50-day line knockback. On to the Dow, and here the picture is rather better than the other two markets we're looking at least we're on the right side of the 50-day line. That's at 34,700. Above that, obviously looking for a retest of last month's resistance through 35,500, but still not confident enough to rule out a test of the floor of that rising trend channel from March at around 34,200. But ideally, there's no end-of-day close back below the 50-day line, and the RSI now just under 52 remains on the right side of neutral 50, but a little bit here and there on the Dow at the moment. Moving on to the Bitcoin situation, and here not a happy one towards the end of last month. So we're back at the recent lows. 25,300 was the dip during the week, but I suppose the better news is that the market went a tad lower to start September, but the RSI is a bit higher, so that might be the first sign of bullish divergence and a rebound off the floor of that January price channel around the 25,600 area. The initial target here, obviously the 200-day line, where we failed during the week, 27,600. But obviously the highs of last month through 30,000 still feel a long way away. And we're not out of the woods yet below 25,300 to hit that red line from March, top of that broadening triangle, as low as 23,300. So the longer we stay below that 200-day line, the greater the chance of 23,300 on Bitcoin. Moving on to the stocks, and kept on giving coverage to Artemis. I don't think anyone else is even talking about it, but here we've had one, two, three, four unfilled gaps to the upside since June. Admittedly, there was one to the downside as well in the interim, but since the beginning of last month, a great move up, three unfilled gaps to the upside. And the longer we stay above resistance on the way down, around 1.5 pence, the greater the chance of a move to 2.6 pence by the end of this month. And looking great, especially on no news. I haven't looked at Acuity for a while, especially since it changed its name, which prefer the old name, I have to say. But here we've got a situation, we've got a rising trend channel there from February. Just had a nudge of the 200-day line at 7.5 pence, above 7.5 pence on an end-of-day close basis. And it could be up to 10.5 pence as soon as the end of this month. That rising trend channel and the unfilled gap to the upside, the bear trap gap reversal at the end of May, still very strong signals to back a further move to the upside for Acuity. On to Celadon, which seems to be getting coverage in the national press, at least I think ITV, etc. So well done to them. So far hasn't really helped the share price, which is one of the problems of the mainstream media these days. We've got a falling trend channel there, but we're just looking to break that channel through £1.47. If we can do that on an end-of-day close basis, we could see the shares up to as high as £1.90, the top of a broadening triangle from April by the end of next month, by the end of October. We already had a decent bear trap rebound from below July support at £1.40, and so ideally we stay above that particular level as long as possible. Any downside now limited hopefully to £1.30 if we even go below 140. Back to a stock which I looked at a while ago, which seems to be on a recovery track at the moment. Cornerstone, rather horrible gap down that we had at the beginning of last month, but the shares seem to have regrouped above the rising 50-day moving average. Just looking for an end-of-day close above the 50-day moving average to get us back to the top of that rising trend channel from back in July 2022. So the target here looking to be 13.5 pence by the end of next month at the very latest, while we remain above the 9 pence zone. But it's really the recovery here, very slow recovery that we've had, which is the watchword. Stock which I haven't looked at for ages until during the week, which is Eneraqua, and here enjoying the potential recovery here. I was hoping that the shares would close above the top of that gap, 92.5. They did that by the end of the day, 97.5. So all it needs now really, we've already got the gap close buy signal and the bear trap reversal. Got bullish divergence line there from back in May. And so the target here looking to be as high as £1.21, £1.22 by the end of the month, while we remain above 92.5. If you're cautious, you just want to see that line of resistance there from May broken at 98 pence, but I think the shares have more than done enough to establish their bullish credentials. Next up is Gfinity, which I covered in the weekend small caps earlier today. Here we've got a nice U-shaped bull flag, as I would call it, closing above the August high on the first session of the new month, which is always a winner, up above 0.11, looking for 0.2 pence as soon as the end of this month, and with that rising 50-day line and the sideways shuffle above it, feeling quite chipper about the prospects here, as well as the bullish divergence line, which has basically started the rally back in the middle of July. Guild Esports is next, and here we're looking at a picture which is also a recovery scenario off the lows after a very long and horrible bear market in the stock. Here we've got a rising 50-day line. We've had a little sideways shuffle just below, broken a line of resistance there from April, looking for 0.95 basically by the end of this month, while we remain above that 50-day line around the 0.65 pence area. Nice move in Insig AI, and another stock I covered in the editorial. Here we're looking for 26 or 27 pence by the end of this month. It looks like we'll get it well before that. And feeling bullish about the shares while they're above resistance on the way down at 21 pence. If you're a fan of the shares and looking for greater glory, then the next level up would be the upper parallel of that October line from last year at 34 pence. Hopefully by the end of this October or even sooner. On to Kodal, where the market agreed with my assessment that the shares were a little bit oversold down in the sub 40.45 area, or at least a 0.5 area, so we've managed to break through that rather well. Initial target here was 0.68, 0.7, and through that obviously looking for resistance on the way down at 0.78, hopefully by the end of next month or even sooner, but by the end of this month hopefully towards 0.7. Not a difficult thing to do, especially while we remain above that broken April resistance line at 0.53. Pantheon, the stock of last week by quite some distance, and happy that the shares were mentioned this time last week, and I think before that as well, as a potential riser. We had a great strong rally there, or strong move on the last Friday week. Initial target was up to 22 pence, and after the 22 pence, we're looking for as high as 32 pence by the end of this month. So the longer we stay above 22, the greater the chance, hopefully, of 32 pence by the end of September. Good move within a rising trend channel for Rainbow Rare Earths. You can see that channel has been in place since back in April. Top of the channel, they're heading for 20 pence. And the highlight of the last week is that we broke July resistance at 15, above 15, looking for 20 pence by the end of September. Only back below 14 and the floor of that channel, really delaying the upside scenario on Rainbow. I've given quite a lot of coverage to Touchstone, and here it is again after that rug pull that we had from the beginning of last month. Rather horrible gaps down there, but shares basically found support at the floor of that rising trend channel from December. That's around 66 pence. The longer we stay above 66, the greater the chance of 95 pence by the end of next month. If you're looking for a fresh trigger here, it would be an end-of-day close back above the rising 50-day line at 74 pence. The rising 50-day line close would be a good signal on that. On to Venture Life, which I missed out looking at during the week here. It looks as though we're just breaking out of that falling wedge that's been in place since March, and the 50-day line also capping that above 34 pence, looking for the top of the broadening triangle there from back in June as high as 40 pence by the end of this month, and hopefully we could see much more there, given that Thursday gave us a gap close buy signal, so the shares closed above the top of that August gap. Last two. First one is Wishbone, and here a stock which has been pummeled a bit by the bears, but looks like it's back in business now, especially with the fundraise out of the way. Got a rising 50-day line after a sideways shuffle either side of it over the course of August. So that's normally a good sign, and the longer we stay above the floor of the rising trend channel from July at 1.9 pence, the greater the chance of a move to 4 pence, hopefully by the end of next month or even much sooner. Neckline resistance there around 2.1 pence, so ideally we stay above that. Finishing off with a stock which is perhaps something of a surprise in terms of being one of the big rises of the week, but here we've got Wildcat, and the direct to share buying at 0.3 seems to have worked, as well as the marginally higher low for the latter part of August, above neckline resistance here at 0.33, looking for 0.7 pence as soon as the end of next month. Obviously, we're not quite as dynamic on these things. You'd probably just be looking for up to 0.55, which was the June peak on the share. So hopefully we get that by the end of this month, backed by a bullish divergence line in place for the post-April period. That's it from me today. More updates tomorrow.